Welcome at forextrading.com. Let's see an example what is trailing stop and how to use it. So if you force me to tell you to call the trailing stop differently, I would call it just an automatic stop loss. So stop loss is a point where the transaction is stopped out when it's moving in reverse direction as we predicted. So if we wish to sell this market, for example, we are talking about euro dollar 30-minute chart. We are selling this currency because I see the downtrend and I'm thinking it is more probable to sell it right now. Let's do it, for instance, to show you how the stop loss works, trailing stop. And the idea of trailing stop is that stop, you see, if you want to do a classic stop loss, for example, you can click here to SL point and, for example, set it to 31.33. And no matter what happens, if the price action will take us to this point, the stop loss will close this transaction with loss because we took the short position. We are winning with the market dropping down. So if the price behavior go up, it will be our loss. But if you're gonna take the trailing stop option, for example, let's click at the right click button and trailing stop option, we have it automatically. For example, let's take it for 25 points. And right now, from this moment, trailing stop should be working. I really haven't been using the stop losses like this one before, only for trading purposes, because I do them rather manually. So it is not something I'm recommending for the market, but trailing stop works like it was 31.14 when we clicked this trailing stop. So a trailing stop blocked the market of 31.14, and if it's gonna move back for 25 points from this moment, it will activate our stop loss. Whenever the market will go down, for example to 30.85 points right here, and our trailing stop is 25 points, the market will stop out our position when the price will reach 30.60, right? So we are talking about 25 points movement, for example. Sorry, the market gonna stop us out at 31.05. So 20 points, 25 points higher as we matched our trailing stop at 25 points. So idea is the market going down and the stop loss is blocking us from losing more than 25 points from the minimum that market hit some particular level. So for instance, for example, if the market is gonna go down to 30.00 level, so I'm talking about 1.3000 level, and market is gonna turn back 10 points above and move back to the downwards, we are still having our position open. But if the market hits this level, for example 30.00, and move 25 or 26 points above, our stop loss will be activated. So trailing stop really goes after the market. So it's doing a job for us. For example, if you want to take a position for a night, and you don't want to miss opportunity of market going down, but you don't want to risk more than 30 points from this level right here, you can block your profit of whatever market's moving minus 25 points, for example, like we did it with this trailing stop example. So conclusion is trailing stop is something useful. If you like this kind of trading, you can set the market will be, I mean, your position will be going with the market unless the market will change reverse for a specific amount of pips, you won't be stop out. If it move back for 25 or more pips when you set your trailing stop for 25 points, for example, the position will be stopped out. So it will be a maximum profit minus 25 points. So it's rather used most of the time. When I used to use it for training purposes, I use it at the very fast, strong, trending market. Like for example, this moment right here, when the retracements are taking breath of the market is very small, and we are hitting the down or uptrend very fast, very strong trend, then the trailing stop might be useful. But most of the time, trailing stop will stop you out no matter what, because the market usually takes deeper breath than just 20 or 30 points or whatever you set automatically. I mean, manual stop loss usually takes a better chance of your good, reasonable decision looking at the live market. I'm not talking about looking every minute, but every half an hour, for example, when you are a day or medium time trader. Thank you very much for listening. I am discussing more about stops and trailing stops and how not to be stopped out too fast on our live training course. Thank you very much.